A landmark year. That's how Lloyds wants us to think about 2017. There was a big jump in full-year pre-tax profits to a record £5.3 billion, although that was slightly below city expectations. And the bank will return more than £3 billion to shareholders. But yet more money was set aside for PPI, and the boss's £6 million pay packet has raised eyebrows. Well, that man, Group Chief Executive Antonio Horta-Osorio, joins me now. Antonio, thank you for joining me. Now, this is probably the best showing since the financial crisis. It's been a long old haul.
Well, it was really a landmark year for Lloyds. In the last year of our second strategic plan, we were able to create the largest digital bank in the UK. We now have more than 13 million customers online, by far the largest bank in the UK. We were able to return to full private ownership and gave taxpayers money back and some more. And finally, as we just heard, we have increased our dividends and retribution to shareholders by 46% in the year, amounting to £3.2 billion, the largest ever capital distribution from Lloyds to shareholders.
I guess if there's one blemish on these numbers, it's the fact that there's yet another PPI provision. I mean, that August cut-off next year can't come quickly enough, can it?
Well, we just provision according to past behavior. There was an FCA campaign that raised awareness, and rightly so that customers can get their money back ahead of the deadline. That was the purpose of the campaign. That meant £600 million in the quarter.
Now, you mentioned the distribution to shareholders. Worth pointing out, you're probably the most widely held company in the country, millions of shareholders.
Yes, we are by far the largest held company in the country. We have 2.4 million shareholders.
Why are you doing a share buyback rather than paying out a special dividend?
Well, that's an interesting question. I mean, the board, given we had a significant capital surplus, the board, after due thought and consideration, thought that we should, on one hand, increase the ordinary dividend substantially. We increased the ordinary dividend by 20% versus the total cash dividend paid last year. That is a dividend yield of around 4.5%, and given that we still had some additional cash available, the board thought that we should distribute it as a buyback, because some of our investors, like for example American investors and others, prefer buybacks. So in that sense, we had enough capital to please both of our types of shareholders.
Right. Now, the big news today is that you've announced your next 3-year strategy. You're targeting a return on equity of between 14 and 15%.
That's right.
You're only at 8.9 at the moment. That's going to be quite a stretch, isn't it?
Well, we are at 8.9% return on tangible equity, but our underlying return after tax is already 15.6%. As we continue to increase our profits and as we finish the legacy issues of the past, the statutory return on equity will reach the underlying return on equity. So we are very confident. That's why we have actually increased our guidance about returns. We increased it to between 14 and 15% from previously 13.5% to 15%, but on a higher capital base, because now we will have a capital requirement of 13% plus 1% management buffer. So we are increasing the return guidance on a higher capital base, and we are very confident that we will achieve it.
Now you're looking to take 15% out of your cost base during the next 3 years. A lot of people will say, oh, that means more branch closures.
Well, we haven't announced that target, actually. What we said is that for the next 3 years, what we are going to do is, number one, we are going to keep the largest retail bank in the UK and the largest digital bank. We want to increase further, and we are going to do the biggest investment in the business and in our clients and in our colleagues ever. We are going to invest more than £3 billion over the next plan period, the next 3 years, which is the largest amount ever, and that is going to enable us, on one hand, to continue to develop our digital bank. We want to have more than 15 million customers by 2020. Number two, we are going to significantly increase our presence in the financial planning and retirement space, where we are significantly underrepresented. And thirdly, we are going to make the bank more agile with the new technologies, with artificial intelligence. We want to do an absolute end-to-end transformation of the bank and prepare the bank to succeed in a digital world.
But you're not ruling out more branch closures?
I'm not ruling out, because what we do in terms of branches or any other thing in the bank is we follow what our customers want. Branches are incredibly important for us. We have the largest branch network in the country, and we are going to keep it. Our target is to keep a 21% market share of branches. Of course, what those branches do will have to be different in the future. They will have to provide more complex needs of our customers, more value-added needs, such as advice for mortgages for first-time buyers, or financial planning and retirement advice, or more needs from our business banking customers. And what we will do is to follow what our customers want. And they are growingly interacting with us on a multi-channel approach, but exponentially more through digital. That's why we have more than 13 million digital customers.
Indeed. I mean, you are the UK's biggest lender, as we said, biggest mortgage provider. You're very much geared to the UK economy. How do you view the health of the UK economy right now?
Well, this is a strategy we took 6 years ago, and it has proved to be exactly the right strategy. The main purpose of Lloyds is to help Britain prosper. We had 30 countries 6 years ago. We have sold those positions. We have concentrated the bank in the United Kingdom. 97% of what we do is done in the UK. And we have sold what we had in asset management, international private banking. What we do is to support the real economy, the families, the businesses, and the communities of the country. And therefore, what happens to the UK economy is absolutely critical for us, and that's why the fact that we are completely focused on helping Britain prosper is good for us and for the UK economy. The two objectives are inextricably linked. And what we have seen is that the economy is in good shape. GDP has been growing at 1.8% and grew over the last few years with less leverage in the economy, and at the same time with rising house prices. How do I see it for the next 12 months? Well, on one hand, given the pound's depreciation, inflation has been rising and above disposable income, which is affecting consumption. But on the other hand, employment has never been higher, continues to grow, and that helps consumption. And the same pound depreciation helps exports to the European Union and to the rest of the world. And finally, the world growth is now increasing. We are a big open economy and we benefit from the world growth as well. So all in all, my best prediction is that the GDP growth will be reasonably the same over the next 12 months like it has been in the past 12 months.
I just want to ask you very, very briefly, Jeremy Corbyn made a speech yesterday and he said banks need to be the servant of industry, not the masters of us all. That's a bit of a dig at your industry, isn't it?
Yeah, I read his declarations and he says exactly that, and he said that banks should focus on the real economy, which is exactly what Lloyds is doing, as I just told you. I mean, Lloyds' purpose is to absolutely help Britain prosper and to help the real economy, which are the families and the businesses of this country. To give you an example, in the last 7 years, we have supported SME net lending by an additional £8 billion, while the Bank of England numbers show the sector as a whole having decreased £20 billion. So our support to small and medium-sized businesses, which are the lifeblood of the country in terms of employment and exports, has been massive, and our market share increased from 13 to 19% in that segment.
All right. Antonio Horta-Osorio, got to leave it there. Great to see you. Thanks for joining me.